Crypto Pirates Daily News, August 26, 2021. Latest news headlines. The unemployed seek financial relief through crypto video games. Is investing in crypto mining companies the best way to make cryptocurrency investments? Why is Avalanche Cryptocurrency so popular at the moment? Ripple is suing the SEC for $XRP sales via a letter to retail investors. With the advent of DeFi, the evolution of cryptocurrency is taking a new direction. Kombat is the newest addition to the market of play-to-earn crypto games. Asian lonely hearts become prey to scammers using Bitcoin and Tether. The unemployed seek financial relief through crypto video games. When Vincent Gallart was fired off in July, the Manila IT analyst discovered an odd financial lifeline, a cryptocurrency-based online game. Gallart earned more than 37,000 pesos, $732, in his first 2 weeks of Pokemon-like questing and battling, 3 times what he would have earned at his real job. The 25-year-old Gallart, like many other beginners to so-called play-to-earn games, had no prior knowledge of Bitcoin, Ether, or other cryptocurrencies. He now envisions a profitable secondary hustle. "I began playing Axie the day my company cancelled my contract," he explained. "Thank you very much." Axie Infinity is one of the most popular, and divisive, of these new games that allow players to collect tradable cryptocurrencies. It provides a doorway to cryptocurrency for individuals all around the world, according to investors such as billionaire Mark Cuban and Reddit co-founder Alexis Ohanian, who were part of a $7.5 million fundraising round for Vietnamese game developer Sky Mavis in May. Others perceive evidence that the Axie Infinity model is unsustainable, such as the increased buy-in cost of more than $600 and the rush of newcomers working for low-value tokens. The number of daily active users on Axie Infinity increased from 30,000 in April to more than 1 million in August, with the majority of users coming from poor countries heavily hit by COVID, such as the Philippines, Brazil, and Venezuela. According to Etherscan, Axie, which was originally constructed on the Ethereum blockchain, logged almost $30 million in Ether transfers every day over the past month. That may not seem like much in the $2.2 trillion cryptocurrency realm, but it is significant for players and governments in poorer nations. According to local media, the Philippines Department of Finance and the Bureau of Internal Revenue informed players on Monday that their Axie Infinity profits are taxable. Sky Mavis Chief Operating Officer and co-founder Alexander Leonard Larson said the company takes its job seriously, monitoring in-game currencies and adjusting the market as appropriate. In an interview, he added, "Some people compare us to the Fed. Ultimately, we are the architects of this universe, and it is our responsibility to ensure that it endures. We are always monitoring the economy to ensure that it remains in good shape." In Axie Infinity's virtual realm of Lunacia, players control multicolored blob-like creatures known as Axies to collect 2 types of currencies. Smooth Love Potions, SLP, are granted for winning battles and can be cashed in or used to breed new Axies in the game. Axie Infinity Shards, AXS, can be obtained by participating in seasonal tournaments or by selling Axies on the game's marketplace. AXS can also be paid out, however, like other governance tokens, it is intended to act similarly to a share. Holders will eventually be able to vote on new gaming features and business expenditure requests, according to Sky Mavis. A cousin told Gallart about the game. However, to get started, players will need 3 Axies, each costing roughly $200. That was far too much for Gallart, who had just lost his job. He looked for a sponsor, someone who lends his Axies to new players in exchange for a share of their in-game profits, often as high as 90%. Whatever a player earns with a loaned Axie goes to the owner, who is then meant to wire the player his cut. Galat contacted the Real Deal Guild, a group of Filipinos who now sponsor hundreds of athletes, via Facebook. They agreed to let him play their animals in exchange for a small share of his revenue. The guild would take 30% of his winnings. Sky Mavis has profited handsomely from the surge, taking a cut every time an Axie changes hands and collecting a fee when players breed new, non-fungible token creatures. According to Crypto Slam, which tracks NFT marketplaces, players have built over 2 million digital monsters, and the Axie trade has generated more than $1 billion in transactions, making it the first NFT platform to do so. Sky Mavis earnings from Axie Infinity was only $21 million from its launch in 2018 to July 1st. It has made $485 million since then. For many years, virtual products with real-world worth have been a mainstay of gaming. Axie differs from most other large in-game markets in that it encourages players to cash out and provides them with the means and transparency to do so. Instead of using a semi-sanctioned peer-to-peer exchange on an unregulated third-party marketplace, Axie players can take their SLP and AXS to a large crypto exchange and sell for whatever is on offer. Binance and Manila-based Bloom both provide SLP peso trades in response to recent demand from the Philippines. According to independent analysts, the success of Axie in emerging markets is no surprise. The price of AXS has risen dramatically in the last 2 months, in stark contrast to the Philippines' larger economy, where nearly 1 out of every 11 individuals is still unemployed. This summer, SLP tokens have become less valuable and prices have been more volatile. Access to cryptocurrencies is especially appealing in countries where domestic currencies are weak or, in the case of Venezuela, in crisis. However, the Axie frenzy has spawned concerns that the platform is being propped up by new money attracted to a get-rich-quick notion. Vanessa Cao, founder of BTX Capital, described the Axie model as fundamentally unhealthy and unsustainable. Players must invest hundreds of dollars upfront merely to play, she explained. It's a faulty idea. You can't expect people to pay until they know what the game is about. Cao countered with Dream Card, a title from BTX portfolio company X World Games. It's free to start, and around 560,000 people use it to create and trade character cards. She claims that the X World Games do not offer the misleading idea that Santa Claus is coming to town. Would-be Axie players are active on Telegram and Discord, where they are looking for sponsors to help them get started. That's how John Aaron Ramos, a 22-year-old university student from the Philippines, claims he met a Venezuelan gamer in November, months before the game went viral. He used to make up to $300 pesos, $6 per day. Over the next 4 months, he produced fresh Axies while the price of Ether increased, tenfolding his revenue. He broke his relationship with his sponsor and established his own stable of contract players, lending Axies to 15 people, including friends and family. He is entitled to 30% of their earnings. He purchased 2 apartments for his parents south of Manila in March. He has also purchased insurance policies and is considering stock investment. Axie's value may fall, but I am not concerned, Ramos remarked. I must continue to have physical assets in order to be more secure. Sky Mavis does not oversee the connections between sponsors and contract players, though the company did tweet in June to denounce accusations that advertisers were asking nude photos from female candidates. Axie Infinity is a digital nation, and certain people may be criminals, just like in any society, Larson explained. How do we handle those who may be abusing other scholars or players? These are intrinsic obstacles for us. According to him, the firm has banned several thousand users for violating the game's regulations, such as bot behavior or obvious evidence of scams. The corporation appears to be more at ease in its job as a central bank. Sky Mavis decreased the cost of breeding axes after the price of AXS increased roughly 650% in July and early August. It reduced the amount of money users could earn on tasks each day by half while increasing the rewards available to stronger players. Some of the hazards for Axie Infinity players and investors are similar to those seen in the rest of the cryptocurrency market, where significant drawdowns are regular. In June, Cuban himself took a bath after the value of a coin he favored dropped from about $60 to zero in a single day. The investment wasn't so significant that I felt compelled to dot every I and cross every T, he told Bloomberg. I took a chance and failed. Players may be unable to cut their losses if AXS and SLP fall as projected by traders taking short positions against the coins. The game only enables players to cash out SLP every 14 days, a restriction that, like other lockups, irritates them even more when asset values are declining. As it is, there is evidence that newcomers may not fully comprehend how to secure their earnings. According to Larson, customers seeking customer care assistance have emailed the corporation their crypto wallet passwords. The learning curve is the focal point for evangelists. It will help digital asset adoption 100%, says Lennox Lay, Director of Financial Markets at OKEx, a Seychelles-based cryptocurrency exchange. Imagine a large group of people who have never had crypto before, who have never had a wallet, and who have never transferred within the blockchain. There are truly huge chances for crypto teaching here, Lay added. Larson believes the game will be popular in the long run, regardless of what happens to the currencies. We see it as a social network rather than a game, he said. People come in because it's such a novel opportunity, and then they fall in love with the community and game that we've been developing over time. Is investing in crypto mining companies the best way to make cryptocurrency investments? Cryptocurrencies have exhibited the industry's volatility in recent months, surging to a new all-time high before plummeting more than 50%. As the cryptocurrency market's rapid expansion continues to draw new players, volatility remains high in light of this year's events. Bitcoin's price rocketed to a new all-time high of around $64,789 in April before plummeting to a low of almost $29,608 last month. It has now returned to the $49,000 level. On the other side, Ether, which crypto speculators believe has the potential to outperform Bitcoin due to the applications of its blockchain network, soared above $4,000 in May before dropping to $1,776 last month. As a result, forecasting the Ethereum price is now as difficult as investing in Bitcoin. As a result, some investors believe it is more advantageous to invest in organizations that invest in cryptocurrency than it is to attempt to acquire and sell cryptocurrencies. The rationale for investing in cryptocurrency mining firms. Numerous businesses have engaged in the Bitcoin industry in recent years. While some actively purchase cryptocurrencies such as Bitcoin and Ethereum, others prefer to mine them. Crypto miners are compensated for validating each Bitcoin transaction. To be profitable, the current price of a cryptocurrency must be greater than the cost of mining it. As a result, the performance of crypto mining companies reflects the direction of cryptocurrency values to a degree. Riot Blockchain Incorporated and Marathon Digital Holdings Incorporated are two notable examples of companies whose stock prices soared in April before plummeting again last month. Unlike purchasing and keeping Bitcoin or Ethereum, these companies report quarterly financial results, disclosing their revenues, growth plans, and cost structures. As a result, you may determine the company's intrinsic worth to assist you in making an investment decision. As of the time of press, Riot Blockchain shares trade at a forwards price-earnings ratio of approximately 23.66, while Mara Digital shares trade at a forwards price-earnings ratio of approximately 13.00. As a result, investors appear to prefer Marathon Digital as the more attractive value alternative. In summary, investors who prefer equities over cryptocurrency but wish to allocate a percentage of their portfolio to crypto-related investments can do so through the use of crypto miners. Arguments in favor of purchasing and selling cryptocurrency. While crypto aficionados are hopeful about the future of cryptocurrency, history indicates otherwise, at least thus far. Even after big global corporations such as Walmart Incorporated and PayPal Incorporated opted to embrace cryptocurrency, the Bitcoin price remains volatile. As a result, purchasing and keeping cryptocurrencies indefinitely may not be prudent. However, given Bitcoin and Ethereum's volatility, the market offers numerous opportunities for short-term traders to profit. Cryptocurrency trading is gaining popularity as a result of its availability on margin trading platforms for foreign exchange. However, although the potential for profit is enormous, so are the risks. Conclusion. In summary, crypto mining companies offer an alternative to investing in the highly profitable but extremely risky cryptocurrency sector. As a result of the continued volatility of cryptocurrency prices, investors looking to allocate a portion of their portfolios to the long-term potential of crypto may be better off purchasing shares of companies that mine crypto, while traders looking to make a quick buck may still be better off purchasing cryptocurrencies directly. Why is Avalanche Cryptocurrency so popular at the moment? Avalanche is onboarding high-profile DeFi protocols, and its token continues to surge even as other coins retrace their losses. As competition among Layer 1 protocols continues to heat up, one project in particular, Avalanche, is making significant strides towards securing its leadership position. Avalanche welcomes DeFi blue chips. Avalanche, a proof-of-stake smart contract blockchain backed by some of the industry's most prominent players, including Galaxy Digital, Three Arrows Capital, Bitmain, Andreessen Horowitz, and Dragonfly Capital, is on the verge of surpassing previous all-time highs. CoinGecko reports that Avalanche's AVAX coin has increased 341% in the previous 30 days, with no indication of slowing. Apart from the network's significant technical promise, its recent success can be credited entirely to its proactive strategy to onboarding new projects. Specifically, on August 18, Avalanche launched Avalanche Rush, a $180 million liquidity mining incentive scheme aimed at attracting the network's leading DeFi protocols. The program aims to give $180 million in AVAX tokens over a 3-month period to liquidity providers for a select group of hand-picked DeFi applications on the network. The program attracted 3 top-tier DeFi protocols noted for their tight ties to Ethereum in less than a week: Aave, Curve, and SushiSwap. Stani Kulchov, founder and CEO of Aave, stated the following about his project's expansion to Avalanche. Avalanche Consensus is well suited for developing DeFi applications due to its scalability characteristics, most notably high throughput and near-instant finality. The Aave protocol's adoption on Avalanche will enable users to benefit from low transaction costs without jeopardizing the network's security. Avalanche bills itself as the fastest smart contract platform in the blockchain industry, in terms of time to completion, and with the most validators securing its activity of any proof-of-stake protocol. It offers a transaction processing rate of 4,500 per second and a transaction completion time of less than 2 seconds, all without compromising security. The term transaction finality refers to the time required for a transaction to settle. By comparison, Ethereum presently processes 14 transactions per second, excluding Layer 2 protocols, with a 6-minute transaction duration. More than technology. However, Avalanche is more than simply technology. It is one of the few Layer 1 protocols to have seen actual ecosystem and community growth. Indeed, this was the primary reason SushiSwap expanded to Avalanche. Sushi contributor 0x Maki stated the following about the team's debut on the network. One of the most compelling reasons to align incentives with the Avalanche chain is the community. We are a community-driven platform that admires the Avalanche ecosystem's community focus and looks forwards to offering a great DeFi experience to its members. Apart from the introduction of Avalanche Rush, Pangolin, the leading decentralized exchange based on Avalanche, now has roughly $376 million in liquidity but an amazing average weekly trading volume of nearly $1 billion. Benki, an algorithmic liquidity market protocol that launched less than a week ago, currently has approximately $1.75 billion in total value locked. It's critical to highlight that Avalanche is compatible with the Ethereum virtual machine, which means developers may easily and inexpensively migrate their decentralized apps from Ethereum to Avalanche. The shift is also smooth for Ethereum users who wish to interact with the ecosystem, courtesy of Ava Labs' next-generation cross-chain bridging technology Avalanche Bridge, which is 5 times faster than the prior approach. When Ava Labs founder and CEO Emin Gun Syara announced the bridge's launch last month, he spoke about how it would improve the user experience. As he stated, the new Avalanche Bridge represents a significant advancement in bridge technology, but more importantly, it represents a major improvement in the user and developer experience across the community. Besides the relative effectiveness of the liquidity mining incentive program, another significant aspect likely contributing to Avalanche's popularity growth is AVAX's tokenomics. As with Ethereum and its new EIP 1559 update, Avalanche burns a portion of transaction fees, pressuring AVAX into deflation. Since the network's introduction, over 183,721 of the total 720 million AVAX tokens have been burned, a statistic that is expected to grow as the protocol gets traction. Avalanche is presently trading near $50, valuing the company at $8.66 billion. It has surpassed Bitcoin to become the world's 20th largest cryptocurrency. Ripple is suing the SEC for $XRP sales via a letter to retail investors. Ripple utilized a viral tweet to reference an email from the U.S. Securities and Exchange Commission, SEC, on the XRP token's status. The email was issued to a user who questioned if the token was a security. Late last year, a Twitter user using by the handle Frank contacted the regulator to ascertain if the item they purchased was a security or not, since no decision had been made yet. The SEC said that it had not made a judgment on whether the cryptocurrency XRP is a security, and that whether a cryptocurrency is considered a security will depend on its characteristics and use. The SEC sued Ripple and 2 of its officials 2 months after the tweet was published, alleging that they raised more than $1.3 billion through an unregistered, ongoing digital asset securities sale. Ripple is now quoting the tweet in a court filing in response to a declaration made by William Hinman, former director of the SEC's Division of Corporate Finance, who stated that he considered XRP to be an unregistered security. Ripple stated in the lawsuit, which was originally reported by Daily Hodl, that the email demonstrates Hinman's evidence is contradictory to the SEC's own public pronouncements. According to the fintech firm, the SEC's experience with crypto assets demonstrates that its case is faulty, since Hinman acknowledged in 2017 that the application of federal securities rules to digital assets was new for everyone. Ripple quoted Hinman as adding that he did not believe people had really considered all of the ways securities rules could apply to that activity, and added, "This testimony, the documents produced, and, potentially, the documents that should be produced in discovery as a result of the defendant's motion, fatally undermined the SEC's allegations that the individual defendants acted recklessly in failing to recognize Ripple's sales of XRP as an unregistered securities offering, as securities law experts of Mr. Hinman's stature, to say nothing of the SEC's, at the time. As Crypto Globe previously reported, Ripple CEO Brad Garlinghouse indicated that the fintech company is extremely likely to go public after resolving the SEC litigation. Garlinghouse stated that the company began exploring the possibility of going public in early 2020, but was hampered by the SEC's litigation. While the company continues to pursue listing on an exchange, it intends to do so following the resolution of its SEC complaint. Jeremy Hogan, a cryptocurrency law expert and XRP advocate, stated that he believes Ripple's legal battle with the SEC could result in a beneficial outcome for the XRP price. With the advent of DeFi, the evolution of cryptocurrency is taking a new direction. The Bitcoin sector has exploded in recent years. While Bitcoin remains the most popular cryptocurrency, the market is seeing the emergence of other new coins. There is considerable optimism that these cryptocurrencies will soon become widespread and will eventually supplant traditional payment methods. At the moment, the cryptocurrency ecosystem is divided into two segments: centralized finance, CeFi, and decentralized finance, DeFi. CeFi refers to cryptocurrency organizations that operate on a centralized platform and offer trading, staking, lending, and borrowing services. Decentralized finance, DeFi, on the other hand, is a new class of decentralized, peer-to-peer lending applications that enable individuals to lend and borrow money without the use of an intermediary. Decentralized apps are those that lack a single centralized authority or node that controls the movement of funds. Because the transactions are managed by smart contracts, the system is impervious to censorship. This emerging market has been giving CeFi a run for its money in recent years. Finances centralized, CeFi. Centralized financial services is a 1980s concept. Additionally, it is known as central banking. The central bank's mission is to maintain a stable monetary policy and to manage the currency of the country. Additionally, it regulates and controls the flow of credit within the economy, typically via interest rates or reserve requirements. All of these services are provided by the central bank with help from private banks. This is accomplished by giving liquidity when it is required, just how a brain coordinates all of your other body organs to perform in unison for your overall health and well-being. Centralized cryptocurrency services work similarly to traditional finance in that they are controlled by a single firm. Among the centralized cryptocurrency service providers are exchanges like Crypto.com. This platform enables users to trade digital assets such as Bitcoin and Ether. Notably, centralized cryptocurrency platforms offer extra services not seen in traditional finance. Cryptocurrency users can boost their earnings by staking on an exchange such as Crypto.com. They are actively contributing to the growth and sustainability of the cryptocurrency ecosystem by doing so. While staking rewards on CeFi platforms are higher than those offered by traditional banks, it is becoming increasingly clear that crypto investors prefer decentralized platforms. Financial markets in an era of decentralization. Decentralized financial markets are gaining traction as blockchain technology matures, as evidenced by the exponential growth in the price of cryptocurrencies such as Bitcoin and Ethereum over the last few years. The global financial crisis of 2008 increased investors' apprehension about traditional controlled markets that governments or banks can manipulate heavily. This is the role of decentralized marketplaces. Unlike centralized architectures, DeFi utilizes blockchain technology, which enables increased transparency and governance while also protecting against fraud and hacking assaults. This means that governments and large institutions will have fewer opportunity to manipulate prices to their advantage. The DeFi market has developed into a diverse array of decentralized financial services, including trading, asset management, payments, loans, and derivatives. The latter group is accessible via DeFi protocols such as Premier Finance, a next-generation DeFi platform that enables users to generate unique call and put options. Additionally, there are other planned DeFi projects whose major objective is to create an ecosystem in which users can participate in social impact efforts. Popcorn Network, a DeFi protocol meant to fund social impact organizations, is one of the players in this space. DeFi members can stake their crypto assets on the Popcorn Network to earn competitive returns based on the featured tactics. Essentially, this project encourages DeFi customers to begin doing good by distributing their stake returns to social impact initiatives that benefit education, the environment, and open-source innovation. Unlike the majority of previous DeFi protocols, Popcorn Network distinguishes itself by establishing a non-profit decentralized project in which POP token holders vote on governance and funding allocation. In an ideal world, token holders would be able to nominate or elect organizations that are creating a positive social impact and choose to fund their activities. Popcorn's network value proposition is one strategy for growing DeFi's market share. Similarly to traditional finance's corporate social responsibility, CSR, Popcorn establishes a mechanism for giving back to society. Conclusion. As the globe adopts digital ecosystems, a great deal is certain to change. This change is seen in the rise of cryptocurrencies such as Bitcoin, which have altered how people view money. Prior to the advent of Bitcoin, the majority of people were hooked on the notion that economies must be run centrally. However, as more people recognize the value proposition of decentralized architectures, this preoccupation has shifted. Having said that, decentralized finance is here to stay, and the future of money will be digital. This new decentralized financial sector has expanded to include a variety of services such as loans, portfolio management, and banking. With the advent of the blockchain, the future of money appears to be bright. Rather than relying on a centralized bank to store their money, individuals can now save their savings in a wallet that they own and control. Not only do cryptocurrencies safeguard your money, they also give ease by enabling users to do transactions from anywhere in the world. Furthermore, unlike other currencies, Bitcoin is not backed by any government or central bank. The US government still backs USD. Kombat is the newest addition to the market of play-to-earn crypto games. Kombat has been operating for a while, but it only recently announced its own play-to-earn concept for its card game. The new play-to-earn approach enables gamers to experience Kombat as the latest addition to the play-to-earn crypto games. Additionally, the card game revealed insights about its economic architecture and its play-to-earn principles. Kombat has announced its economic model and play-to-earn mechanisms, bringing the card game into the growing list of crypto games that have embraced play-to-earn gaming. According to Play-to-Earn, gamers of Kombat will need to stake Kombat tokens to unlock gaming features, while also earning Vombat tokens for in-game purchases. Currently, participants can stake only Kombat tokens. Additionally, players can earn special tokens by staking what is known as IP Kombat, the Kombat liquidity pool tokens. Users would then be able to use their acquired Vombat tokens to purchase NFT cards, each of which would be themed after a different crypto event or well-known figure in the blockchain community. The story continues. These NFT cards are used in fights in which players can compete against one another. Players can earn and use Vombat tokens on challenges. Loot boxes are also an integral feature of Crypto Kombat, since they include things that may be used to upgrade players' hero NFT cards. Tokens for Kombat and Vombat. Because the notion of Kombat and Vombat tokens may be confusing to novice players, it is critical to be able to distinguish one from the other. According to the Medium website for Crypto Kombat, the Kombat token, also known as Kombat ERC20, is the heart of the game. This cryptocurrency is traded on Uniswap and SushiSwap, while a modified version, EP20, is offered on PancakeSwap. Kombat coins can be used to purchase unique items, enable battle mode, and stake for Vombat tokens. On the other side, Vombat tokens are utilized to unlock character cards and multiplayer combat. It is used solely for the purpose of minting NFT cards. How is Crypto Kombat defined? Crypto Kombat is the latest addition to the play-to-earn crypto games that allow gamers to both play and earn. The gameplay of Crypto Kombat revolves around farming and earning. As previously said, players can stake Kombat tokens, gain Vombat tokens daily, and swap such tokens for hero NFTs. Crypto Kombat features what the game refers to as crypto heroes, which can be acquired and traded as limited edition non-transferable tokens. Additionally, you can give or even trade crypto heroes with other players. Additionally, these crypto heroes can be employed in combat to challenge other players and gain additional Vombat. According to Play to Earn, Crypto Kombat was originally one of the cryptocurrency games released on the Ethereum blockchain, but has now announced a shift to the Binance Smart Chain. In the future, there will be additional NFT and crypto games. Lost Relics, Axie Infinity, and Town Star are other play-to-earn NFT and cryptocurrency games. Another example of a play-to-earn NFT game is Spaceport, a play-to-earn NFT game in the arcade style that was introduced on the Binance Smart Chain. Despite the abundance of alternatives now available, NFT players can anticipate further titles in the future. Among them is Monster Infinite, another play-to-earn game that is seen as a less expensive alternative to the popular Axie Infinity. Asian lonely hearts become prey to scammers using Bitcoin and Tether. More Asian singles are apparently being duped out of their hard-earned money and digital assets such as Bitcoin, BTC, and Tether, USDT, by an increasing number of scammers preying on naive users of dating apps. Numerous stories from the region detail how unscrupulous individuals acting as exotic overseas crypto traders lured romance-seeking smartphone users into traps, only to defraud them via fraudulent exchange platforms and other dubious practices. According to UT, via Yahoo Japan, in May, a woman in her 30s from Kai, Yamanashi Prefecture, contacted a man online who claimed to be a foreigner. After speaking and establishing an online friendship, the individual revealed that he was a successful cryptocurrency trader with insider knowledge on how to profit from token trading. He persuaded her to invest $910 on what appeared to be a legitimate trading website. When she reportedly made a profit of about $250 on her first trade, he enticed her to make 7 additional investments totaling $345,000. When she attempted to contact the gentleman later, he appeared to have vanished into thin air. The news comes only one day after a Kyoto News investigation recounted how a woman in her 50s in Omihachiman, Shiga Prefecture, was solicited via the Line chat app by a man claiming to be a foreigner. Additionally, the man claimed to be a successful cryptocurrency investor and induced her to purchase $82,000 worth of Bitcoin to transmit to a cryptocurrency trading platform, before abruptly terminating contact with his alleged victim. The occurrences are being investigated as part of ongoing fraud investigations. In February, Japan's consumer watchdog, the National Consumer Affairs Center of Japan, urged males aged 30 to 49 to be cautious of crypto scammers lurking on dating apps, particularly those claiming to be foreign crypto specialists. Meanwhile, Chinese singles are becoming victims of cryptocurrency scammers using dating apps. Cryptonews.com reported in April on the instance of a Zhejiang woman who was fooled simultaneously by two fraudsters while utilizing a dating app. Additionally, a Hong Kong woman told the United States-based Chinese-language news source Epoch Times claimed she met a man on the Coffee Meets Bagel dating app in March. According to her, the individual convinced her to make many USDT transactions and then sent her, and her tokens, to what looks to have been a bogus website. Several weeks later, the woman discovered she had been duped, but not before parting with over $120,000 of her hard-earned money. However, it appears as though classic scammers are still active outside of the dating app sector. In mainland China, investors in the Jiangsu, Guangdong, Shandong, and Chongqing provinces fell for a $216 million multi-level marketing fraud orchestrated by persons who allegedly claimed to have developed a cryptocurrency mining platform that did not require traditional mining rigs. According to the JCRB, 17 individuals were arrested in Jiangsu on suspicion of being involved in the fraud. If convicted, prosecutors hope to get sentences ranging from 2 to 6 years in prison for the defendants. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.